How's it going, guys? So today I'm going to be showing you guys a recap of what happened today. If you haven't seen my previous video, I did the video me recording live trade, so you guys go check it out. But this is going to be the recap for the day. So on the daily, so this is Friday. This is all the price action that happened Friday, and this is Friday's high, Friday's low. I like to do this because it kind of shows me what I'm kind of helps me out with my bias. Because I know if we take out this low, we might be looking for more buys than we are looking for sells. Just like if you look at any one of these, we take out this low over here or this high, fake out and push back down. But let's get into the market. So on the 4 hour, this is what we have. So let's drag this over here so it doesn't take up the whole vision. And I already have my chart lined up so that way it makes it easier for you guys so you guys can see and understand. But I'm going to go in depth. So Friday's low, Friday's high. As you can see, we are in a bullish market structure because we took out the high. You can see the huge push to the upside. So let's look at the 15 minute. Now on the 15 minute, this is pretty nice because this they didn't play that action during the day. Because on the 15 minute is a lot clearer because if we use our Fibonacci retracement tool right there, from right there to the high, as you can see, we came back down to the 71% retracement. We did close a little bit under the 71%, then we just pushed back up to the upside. But if you use this, you would have seen perfectly this was a good buy traded. But on the other time frames, look, we see we had a break of structure here. It was a weak break of structure, but it's still considered as a break of structure. And of course, if you go down to the lower time frames, you can see we get this 2 minute break of structure over here. We had this one couldn't continue, came down to break this weak break of structure. But yeah, so like I said, the 15 minute was more important because if you traded on the 15 minute only, you wouldn't see like that. There was no noise, there was no trap. You just see perfect price action. But on the other time frames, you do see all those rubbish, all those traps and whatever the fuck you want to call them. But so let's go into it. So I mean, look at this morning. As soon as the market rallied, so we had this. First of all, the market was trending up from yesterday, as you can see, break a structure to high. So we expected the market to give us some kind of retracement, right? So if we go ahead and draw a two from over here, we didn't get a 50% retracement or anything. Now, if you go ahead and draw from the overall low, which makes it even worse, we don't get any retracement. So the market just pushes back down, then pushes back up. On this one, I didn't take my trade on the what's it called? I didn't take my trade on the 2 minute. I took it on the 1 minute because I always have my 1 minute and my 2 minute. If you go look at my video that I posted today after the trades I took live, you get to see I have my 1 minute and my 2 minute on the chart. So if we go to the 1 minute, so we, as you can see, we had this huge push down. So first of all, we had this order block over here. As you can see, the market doesn't respect the order block. It just breaks the order block, then pushes all the way down and pushes back up. So two things that I did over here. Okay, so if we were so first of all, the market came back into this order block over here, right? It came back into this order block, then pushed back down. This happened really fast because this was like the 8:30 exactly. This is the 8:30 spike. The next thing that happened was the market took out this immediate high over here, either with this red candle or this bullish candle. So what that means is now since we had this break of structure, we never enter on the first candle that takes out the high because we want to wait to see if it's going to be a fake out or a trap. So what we do is we go ahead and wait for this next candle to be taken out. We don't get in on this break. We get in on this break over here. So you get in over here. You get in over here. Stop us right there, and you just throw. I mean, if you had the balls, you could have held this for a huge banger today. As you can see, big cojones. You held this for a 1 to 5. But that's not what happened. So, took a couple trades over here. The market pulled back, gave us this, retracement again, small retracement and pushed back down. If we look, we still didn't get a 50% retracement. We just got a small minor pullback, then push back up to the upside. Then on the 1 minute, we had this break of structure. Okay. If we go back to the 2 minute, we can see on the 2 minute, this what happened was the market came out, grabbed this low, just grab this liquidity and continue to push back up to the upside. So I mean, same thing could happen over here. If you're going on this trade over here on the 2 minute, like I said, this would have been a good spot for you to add, more for you to add more to your trade. You could add more contracts on this trade right here. As you can see, if you got in one contract here, you can add another contract as soon as we take out this low and automatically put your stop loss underneath this low. Because remember, if we take out this low, if we grab liquidity for this low and the market still comes back to take out the next candle that just grabbed it, it's not going to hold. It's more likely going to retrace back to go find support, order blocks, retracement to or whatever it is. So you want to get in right here on this break, right there, and wait for the market to stable, then put your stop loss automatically underneath this. So then just wait for the market to push back up. But as you can see, market did that and eventually pushed all the way up. So if you held this trade, you would have captured, I mean, let's see. So on the 2 minute, we are looking at almost 352 ticks. I usually trade micros because, like I said, I'm using strict proper risk management. I don't want to over leverage. I don't want to over trade as well. So 352 times 2.5. That's $800. You would make that with five micros. Do the math. You would have made less by about $600 with four micros. The math just goes on proper risk management. Plus, you wouldn't be risking that much because I'm sure if you got in on the straight over here and you put your stop loss underneath here, exactly. So I mean, you're risking, should I say, $500 to make almost none of them. Sorry, none of them. I said $500 because I was doing what's it called, minis. So that's like 99 times 2.5. Yep, 247 to make almost $900. So that's proper risk management right there. So as you can see, the 2 minute, what happens is we continue to push back up, then the market starts to retrace, and we come back into this small order block over here, and the market was able to fight it off, then push up. This is the trade I actually took that made me the rest of the money I needed to make to be done for the trading day. But as you can see, this mini push we had all the way up to the upside, and then we just couldn't keep moving. The momentum started to die. Then we just started pushing down to the down. So we had this breaker structure that happened. This, I like to call this weak, because there's no foundation to these breaker structures. The market just wasn't strong enough to take out the high, so we just turn around and push back down, take out the easy, what's it called, easier low. So if you go back to the 1 minute, okay, after this happened, so we had this breaker structure here to the upside. Then we had this breaker structure here. But at the same time, if you look on the 1 minute, remember we had this breaker structure that happened over here, right? So I guess this breaker structure was there was so many sellers they had enough power to push the market down. So if we go to use the retracement to, so the market gave us prime 61% retracement, then pushed all the way down to the downside on this one over here. So we have breaker structure that happened over here. The best entry would have been right there on this order block. Stop loss underneath this low. Sorry, underneath this low, and you want to target this low right there. 4 to 1 risk to reward. Perfect. As you can see, the 1 minute order block held, or retracement to hell, because the market didn't have enough juice to come back to the prime, order block. You just retracement and push back down, which is completely fine. But today, most of the great setups we found were on the 2 minute time frame, because I prefer to trade on the. I mean, most of the great setups we found they were on the 1 minute time frame. I prefer to trade on the 2 minute. But as you can see, all the momentum that the market had to push the market all the way down. Over here, you see we don't see any structures. We just see the market keep dumping. But if you go to the 1 minute, then you get to see more of it. For example, we had this mini pullback over here, and quite frankly, I wouldn't have cut the trade because I mean, look, we don't even get a 50% retracement. We just see the market start to fold and turn all the way down. I wouldn't be sure to enter. I'll probably just watch this play out. But then we had another, breaker structure that happened right here. And the market pushed back down to this. Like I said, this was a 5 minute low. I thought if anything, this was gonna hold. But this did not hold at all. This was a 5 minute low, as you can see. Huge momentum to the upside, market played around, came back down. I thought this was gonna hold, but did not hold. Broke the 5 minute low. Broke it with the wick, not a body. So something like this, you have to be careful to see how the market wants to react. If you go back to 2 minute, then after we broke it, the market rallied all the way up again. Sorry, yeah, we broke it, then the market rallied. But if you go back to the 1 minute, again, like I told you, bro, this stupid 1 minute, man, it has everything today. If you go to the 1 minute, put your tool out. Okay. Yeah, the lows right here. And look, we got a 71% retracement. I mean, what happened over here? Breaker structure happened. Breaker structure happened. If you were, if you wanted to get into this trade so bad, you could have taken that trade. Let's go after this low right there. You know, and you'd have made 110 ticks on that trade. So, well, like I said, it wasn't bad. I just don't see the perfect entry for this because the market didn't come back to retest the order block. But at the same time, you could have scalped and see what happened because, like I said, you really never know. Your job is to react to whatever the market gives you. So that happened on the 1 minute as well. Okay, so yeah, 1 minute break the structure over here. As you can see, the market pushed up. There wasn't enough momentum to keep pushing the market down. Then you just turn around and take out this high over here. So now we shift structure from bearish market to a bullish market. Now on the 2 minute after we broke this structure, there's nothing. We always see this market come back down, right? We don't see any order block, we don't see anything. But why did the market bounce from over here? The market bounced because on the 1 minute there was an order block over there. So this is the move that caused this breaker structure. As you can see, all the power came from here to break the breaker structure. But the overall move started from here. Because on the overall move, we had this push up, push back down, push, then take out that low. So this order block, the market came back, tapped it, and pushed up. You could enter right here, you know, stop us underneath this low for super conservative, or over here just to be safe. And you'd have made, 1 to 3 on this trade. Targeted as high back. Yep, 1 to 3. 1 to 3 on here. So let's go to the 2 minute again. Because like I said, the 2 minute is where we prefer to trade on. So on the 2 minute, same thing happened again. The market breaks this with the quick. It's another body, so we're pretty skeptical. So but yeah, just like this one broke this with a body, the market can't push back down. Breaker structure happened again over here. Market pushed up. So this whole move right here is a breaker. It's a whole move. Sorry, let me with this. Yeah. So this is a whole move to the upside. Market breaks this structure over here. Market pulls back down. If you go to the 1 minute, on the 1 minute, we break the structure over here with the body closes over this just by a little bit, not by nothing crazy, just by a little bit. As you can see, we have this order block over here from right here. I like to put it from the wick because as you can see, the market dropped down into the wick. So the market found some power and ended up pushing the market all the way up. That's on the 1 minute. Like I told you guys, all the nice trades that happened today were all on the 1 minute because the 2 minute just didn't show us enough price action. Except you were waiting for trades to actually really, really play out. Then you would have found some good order blocks trade. But same thing happened again over here. Breaker struck to the upside, market pushes up. This is a rubbish candle. I don't know what the hell this is going on over here, but as you can see, market comes back into this order block, then push back up. Now, if we go to the 1 minute, exactly. So breaker structure happens over here. The market taps this, pushes up, comes back, taps this. The order block over here pushes up, then breaks this, right? So breaker structure happens. Breaker structure happens right there. This video is probably gonna be long because there's so much shit that happened today. Breaker structure pushes this market down with the body closed. Then guess what? There's this order block over here. The market grabbed liquidity and pushed all the way up. As you can see, strong momentum, strong push to the upside. And after that happened, market came back down, broke this structure again. We had this mini pullback in here, came back, but as you can see, this low was not taken out. Now, what does the market do again? The market can't take out this low, so it goes out and takes out this high. Okay, so after we take this, I remember this was supposed to be a strong low, but since the market didn't take that, it just became a just rubbish, honestly. Then this is a weak high because there's no foundation for this. This high didn't take out any low, it didn't take out any low and any high. So this is just a weak structure, a weak breaker structure. So market takes this structure, comes back down, then takes out this low just by a little wick, the wick that pushes up to take just takes out this low over here, right? So then we this becomes a breaker structure to the upside. And what does the market do? I guess you can call this a minor breaker structure to the upside. The market breaks structure, comes back down, taps into this order block over here, then push back up. And like I said, I just like to draw my order block on the wicks because it's too much. I like to be able to see chart clear, so I like to put this on the wick. So if you go back to the 2 minute, sorry, this video is a lot. I know it might be hard to understand. I'm sorry about that, guys, but it's just so much that happened today. So as you can see, breaker structure happened over here on the 2 minute mark. Came back to retest this order block over here and push all the way up. So entry over there, 1 to 6.2. Yeah, you got a 1 to 2 over here. You just have to be careful. But so as you can see, I mean, it's pretty much easy. Breaker structure happened right there. The market comes back to retest and push all the way back higher. Same thing happened again. We have a breaker structure here with the candle. The market comes back to tap into this order block again, push all the way higher. So you could have got in right here. Stop loss over here for conservative, or right there underneath this week. Because as you can see, the market taps into this order block over there and then start to push back up. Then what happens? We get a breaker structure again over here. At this time, keep in mind, guys, at this time I was no longer trading the market because, like I said, I was done probably at like 10, 9:40, 10 a.m. But this is all the price action that happened. I just want to go over it with you guys. So order block was tapped in, pushed all the way up. You can see momentum came in, pushed all the way up. Then we had to break a structure again. We had some body closes over there. Market comes back to tap this order block over here as well. And We take out this high over there. As you can see, almost a 1 to 4 reached the reward. Same thing happened again. Break of structure happened over here. We don't see anything. We just see price huge momentum to the upside. But let's look at the 1 minute. Okay, so break of structure happened right here. The market comes back to tap this order block over here. Break of structure happens again. The market comes back to tap this order block again over here. As you can see with this candle, then pushes back up. Okay, then we have a break of structure again over here. So you guys can see because this is a pretty tight needed price action. Break of structure again over here. The market comes back to tap into this order block, then pushes all the way up again. Then we had another break of structure again in here. So most I feel like for a price action like this, all you have to do is just keep loading positions, honestly. Because remember, as you load a position, you're moving your stop loss as well. So you're kind of also downplaying the risk that you're adding onto it. Because if you got in right here with this tap over here, right, as soon as the market takes that high, your stop loss is now over here. The market comes back to tapping again, and you add another one contract. Market goes takes out the high, now your stop loss over here. So as soon as you break the high, it comes back to retest again. You get in on another trade. So now you're in three contracts. Stop loss is over here. So this one breaks high again, comes back into retest, you get into another position. Now you're up like from moving 4 or 5 contracts. Stop loss is over here. And guess what happened? You get this huge push up there again. So the market doesn't come back to tap this order block. So you will not enter another position. As you can see, the market then pushes back up again, comes back down, pushes back up. So over here, then we don't see what's it called order block trades anymore because like I said, it stops over here. Then market comes back, then pushes back up. Now in these ones, I'm thinking what the market did was retracement too. There we go. 671% retracement. So we put this low underneath here as well on this one. Okay, 71%, 60 to 71% retracement, market push back up. Something like this, you get in over here on this candle, you want to target this high, but it's too small of a trade, so I probably wouldn't take this trade. And the market then dumps at 1450 all the way down to the downside over here. I mean, but that's pretty much everything that happened today, guys. I hope you like it. If you guys have any questions, please like and subscribe. Thank you.